I'm posting the trade right now into the server. This will be the first trade for today. $593.67. Supply and demand zones. Where are you? There you are. So again, you're hitting the orange zone right beneath the yellow now. That's 17. That's 7 days out. $593.97. Good morning. Doing pretty good. How you doing? That's all good. What's going on? Just DM me. Yep. And then we'll go from there. Most likely I'll have some time today and then we could just take care of that. Yep, around the time the market closes. Yeah, if anything, just DM me, like I said. We'll just go from there. Of course, anytime. Same to you. Stay safe. I got you. Later. How we doing, Donald? Good morning. Good morning, everybody. How we doing, Fish? Good morning, Holy. It's good. Will. Sherman. Side. How we doing, Sam? Mario, whenever you get a chance, just DM me. Good morning, Johan. Prime. We got David. We got Danny. We got Culinary. Candace. BG. AC. Beast. Good morning, everybody. We're just going to let this market lag out just a tiny bit. Give us a moment to breathe. All of our charts are already done for pretty much the next couple of weeks here. Even this downtrend, everything that is occurring right now, everything's already planned. For instance, if you get below 593.06, you're just going to hop into a 0-day option, about 3 to 4 strikes out. This time it's going to be 3 to 4 strikes out because the IV right now for the SPY contracts is pretty high. So again, because of the implied volatility, contract prices are in the sky right now. So you might have to buy something like 4 or 5 strikes out this time. But again, that's only if you continue to fall below 593. All you're doing right now is touching the extreme bottom portion. So you're going to either get dramatically bought up here, just like last time. I just want to see how far it wants to go down. Because last time you went as low as... It was, imagine if yesterday you had a high of 601, right? Today you would hit a low of 588. That's how extreme the drop was last time right here. You still held it. Took you 1, 2, 3, and 4 days. You pop right back above. Currently, this is the second day we're below it. So yeah, we're just trying to take it slow. Not trying to rush into it. Currently, we have about 2 plays on the board. Everything is less than $60, which is the wildest part about that. So again, only 2 plays, but just for $60. Well, actually, no, 3 plays. We have 3 plays on the board right now for $60. So this is amazing. Remember, last time we had turned around $20. It was it 20 or 24? I think it was $20 because we had 3 plays, or was it 2 plays? It was 2 or 3 plays for SPY. They went from around $4 each to around $200 each. So that was the most extreme gain we've had, which was last month. We'll try to see if we could beat that this month, but it might be a little hard. We might need a giant runner drop, which we could probably get something during the day, just like how we've been getting the last couple days. Just gotta take it slow. Okay. So, again, 593. That's the bottom of the whole entire trend here. Anything below, continue to play the puts to 591 and then lower. 593 and above, we're going to try to see if we could just continue to play the upside here. All right. The euro market's doing exactly what we wanted. All right, I just got one position on the euro. I'm about to buy my second one right now. 198. All right, so we got 3 accounts in the euro trade right now. I'll show everybody the euro screen. I want euro to run to about this high up here. Currently, this is where you're at. That's the last high. We just need to go above this last high right here. Once we go above this high, you can actually start crashing out the sky once more. So yeah, that's all I'm looking for. But yeah, anyways, besides this, I want to see if this is just going to drop out the sky here. Okay. SPY is dropping. The next area you're going to be able to buy calls at is going to be around 590. Again, we only put $60 around the 590 601 point, right? So around 601, 605, we have around, again, $60. So yeah, it's not that bad. We'll just average down. Tesla, we're going to have to fix up this trade, fix up this idea. We still have plenty of time. Might have to just average down on the play. And then for Bitcoin, you already know the deal. We're waiting for Bitcoin to drop. I mean, I could easily explain why I want Bitcoin to drop now. Look at 2021. You hit this box up here, right? 1, 2, 3 boxes down. Then you continue to head up higher, and then you started falling out the sky. Simple. How much boxes have you hit now? 1, 2. The third one's going to be at 73K. That's the reason why I told everybody Bitcoin's going to fall to 73K. After that, we're going to buy up some of these plays. MSTR, Coinbase, Mara, Riot. We got a bunch of plays that we can buy into. We might even buy some of the meme coins, right? And yeah, that's it. We're just going to wait for that. On SPY, we're waiting for something else, which is the fact that you're finally hitting the extreme portion of the bottom range, which is perfect. It's kind of what we wanted since, you know, a month ago. The only problem is we just got to wait. That's all. Again, we can continue to play the downside below certain areas. For instance, right now you're below the midpoint between the yellow and the purple zone. So anywhere below 592.57, once again, it's telling you you can have a continuation to the downside. 592.57. Currently you're at 592.61, a little bit above it. Now you're finally below it. Now you're above it again. Now below it. So yeah, just watch the chart here. 592.58. Anything below puts to 590. About $2 of a drop, right? Apple. The Nvidia chart was also perfect as well. Everybody already knows the deal with Nvidia. We have a second opportunity here, and no, yeah, this next Nvidia trade is going to definitely be 1,000%. I'm going to ensure of that. Last time we were very close to it. We got 2,000%, and then the way back up, we only got 100% because we got a little far away. But in doing that, of course, I've actually figured out exactly how we're going to go about doing the next Nvidia play. And yeah, we're going to be very aggressive with it. There we go, Danny. That's a nice Apple play right there. Bitcoin still falling. Euro market still running up. SPY still dropping below 591. Again, don't put too much capital in this market. Little by little. The goal is very simple. Let me show you. Same goal as last week. So this blue piece of text right here, it says last target after the range is met. We could fall right back down to 585 one last time to hit King's Point and then head right back up to 630. I've been waiting for this since middle of January. Even further than that. So I've been waiting for this. We're $6 off. Take your time, everybody. I'm telling you, take your time. Because if we could hit 585, you're most likely going to run right back up to 630. So us going lower right now is a very good thing, honestly. And then as I cycle between older charts, we're just going to have everybody take the notes of what actually happened and occurred with this drop. Because, no, yeah, perfectly like some of the charts say. Once you drop below certain areas, you continue to fall to other areas. But at the same time, we're not playing that 0-day trend. We're playing the reversal of it. So you're either playing the trend, you're playing the reversal of it, or you're playing the trend that's going to basically unfold for the next 5 days, 6 days, which is the purpose whenever we buy 5-day contracts, 7-day contracts, which we already bought one yesterday. So that means in order for us to buy a new 7-day contract, at least 2 or 3 days of time have to pass, just so we're not putting a little bit too much capital into this market. You don't want to overtrade, and you don't want to over leverage. Once you over leverage, that's where, you know, the emotions and everything starts to swirl. So let's just not get to that point. Let's stay calm, cool, and collected, you know. 591, this is perfect. All right. Let's start getting some of these SPY plays a couple weeks out now. Let's start breaking it down. Because remember, we were supposed to buy a SPY call at 590. Was it 599? I think it was 599, 600. We were going to buy another SPY call right here. But instead, we bought the 7-day. They only cost $40 instead of buying the $200 one. The $200 one is going to come up soon, so just get ready for that. Let me think. That's 3. Market opened up at 8. It's 1, 7, 7 down. 595. All right. $5.90. That's pretty much exactly what you hit last time now. All right, let's go back. Right underneath 5, right around 6. Remember, read all the pieces of text that I have on the screen. You're going to find that everything the market has done the past 3 weeks is something we listed a month ago. So, for instance, what is the current text in front of my screen that I'm hovering on? It says below 592.08, puts to 590.34, and then puts to 586.87. Simple. You know, just follow the simple predictions, put a cheap amount. When it falls from 592 to 590, that's about a $2 switch, meaning if you bought a contract for $20, you switching to strike prices will put that $20 contract at about $60 to $70. So that's going to be about 200 to 300% just off of that drop right there. You continue to fall to 586, and those 592 to 590 puts that you will buy will become around 500-600%. Again, if it happens in a day, if it happens within 2-3 days, of course it's going to be more of a realistic normal value. When you get drops like this in a day, this tends to be what's the limit breaker, you know? So when you're in a limit breaking area where the market's just breaking through a bunch of levels and you're unable to hold, the one thing you want to do is just buy during the module points, right? 590, 595, 580, 585, and that will keep you from over positioning, you could say. Just putting a little too much capital into the market, it will stop that, because you're only going to be buying at certain areas every $5, if that makes sense. So right now, if this is your first position, first buy, where's going to be the first time you average down, everybody? Let me hear it. You buy at 591. When would I average down? Or what's the module below you? Below 590. No. Well, what's the definition of a module? Which is close, but again, no. It would be very similar to yesterday, if you guys remember. I think we went over it one time yesterday, but it's very similar to that. Well, it could be call or put side, right? Like, let's just say if I buy a call at 591, 590, there's only one area that I'm going to average down on, and it's going to be the next module below you. Yep, so that would be around 585. A module basically defines a $5 move in the SPY's chart. So if you're at 590 and I buy a call right now, the only time I would average down is at 585. This will stop you from ever putting too much capital into the market, because SPY is almost never going to do a $15 to $20 move. Meaning that first $5 to $10 drop, you will catch every single trend every single time. You might be down for the first couple minutes, first portion of the trend, for the first portion of the trade. But that second portion, as long as you're zoned in and you know when to buy that second time, you will always have profit here. And what I mean by profit is not just 10, 20%. I'm talking about 50 to 100, 200% gains, because you are testing and trading the full range. You are no longer looking at the market for a tiny little piece of breadcrumbs, This is the full trend. This is how you make the most money. And yeah, so this is exactly how we're trading now. Same time, we're mixing it up with the short-term scout plays. They do really well using indicators, EMAs, just regular small stuff, right? But the most important part is not putting too much capital into this market. Remember, your goal is to always put the least amount of capital into this market. Put the least amount and make the most amount. So, yeah, take it real slow. That's what I'm saying. Like, the confidence that one has now while trading this market is absurd, even when it's going completely against us. It does not matter, because that just means that it's about a flip in our direction. We've been right about the SPY for 2-3 years, especially the last year, more than normal. And due to that just little boost of experience, that boost of performance that we've had last year, it just tells me that we just got to hone it in this year. Just make it a little bit more precise. Actually have a little bit more experience, right? And with this extra bit of experience that we're gaining right now, it's just going to boost us into the spotlight. There was a nice quote that I heard yesterday. And the quote that I guess read, not really heard, was, if you knew you had about 20 failures away from being successful, how fast would you fail? If you were 20 failures away from success, how fast would you fail right now? That's how fast I need you to fail. I need you to fail as fast as possible, but retain what made you fail and retain how you can improve it. And if you could do that every day for a week straight, get into like 100 different trades, 50 different trades, the experience that you're going to have is going to be something that people with even 5-10 years of trading experience don't compete with, just because of how within that short time period you collected 8 to 900 trades, 1,000 trades. And it's the experience. The experience is what's going to take you from A to B here. It's not watching people on YouTube. It's not watching, me. It's not watching another person. It's you trading this market point blank. That's it. Of course, trading with good technicals and good ideas and a good format. But again, the most important thing is you just trading. That's it. Get as much trades as possible. Get a $10 trade, get a $20 trade, get a couple monthly trades, right? Test this market and what it is, because then you'll find kind of what makes you comfortable with trading, right? This is phenomenal. Tesla, we're going to look at it in a second here. We still got some extra capital that we're going to throw into it. AMD, you're getting sold off here. We already had this, of course, chopped up, right? Below 110, puts to 95. And then below 95, puts to 84. If you want to continue to play AMD to the downside. It is obviously $5 below that point, so just watch out. Microsoft, you guys want to see something crazy? I don't know what was the reason. I don't know why I put this. I don't know when I put this. But last night I was looking at this for like 30 minutes and I was like, there is no way that I just guessed Microsoft's drop to the exact point on the exact date. Yesterday was the 24th, right, everybody? And look where you hit. You literally hit the target. So now I was just like, wait a second. Why is this here? Why did I even say January 24th? Where did I even put this? And I'm assuming I put it right about here. So when you were at this level at 428, that's how I know, obviously, right? It's because the arrows, they are right here, which means that we were probably somewhere down here when I made this before we ran up again. And that is wild. Absolutely wild. So we guessed this ever since January 17th, January 15th. Oh, no, this is January. A whole month. Never mind. I was reading it wrong. So that's a whole month behind. No wonder. I was just like, that thing was messing with my head last night, and I didn't know what it was. So I guess I was just reading it wrong. All right. That's okay. We'll get it next time. And for the Euro trade, we're in this trade with 3 accounts. Currently waiting. I think the Euro is going to blast up into a crazy low high here before it gets taken out. And on SPY's reversal chart, right below number 6. So again, number 4, you had a bounce. Number 5, absolutely no bounce. And you were a little bit more aggressive. $5.90. 1013. So 1013, that's $5.93. No. No, yeah, it's $5.93. That's gonna be $5.97, $5.96. So potentially $5.96, $5.97 in terms of a retracement back to the top. All right, so let's sit on this chart for a second. All right, is there anything I got to fix here? fixing up some of the buys and sells on the euro account. Everything else, we're just giving it a moment here. Once you get back above 594, you might get another bit of acceleration to the top side. So just be careful here, okay? Just be careful. Remember, nice and easy, nice and slow. Once the market starts moving a little bit more slower, we'll start opening up our positions for our bigger accounts. For now, we are not going to aggressively average into this market. Remember, it's at the end of the month. What's the one rule I've made for everybody here? That basically takes place the last week and the first week of every month. What is the account size that you are using, family? Just like that. So there should be absolutely no reason why anybody ever needs to be taken out of this family again. I should never see a single one of you ever be able to or have to forcibly leave. If it's your decision to leave, that's perfect. That's exactly what I want you to decide. But if it's something that's being decided for you, I don't want that. And if the market's deciding it for you because you're not achieving enough profit, there was so much of, amazing personalities that within the last year, they just had to disappear. And it's like, I know they could have changed their life. I know they could have done this for themselves. Regardless of how the conversation went with me and Dumb, I could care less about how my emotions may have affected it. Point blank, they had potential and they could have gotten it. And if things were just aligning a little bit better, maybe it would have happened for them, Even if the universe maybe said it wasn't time for them to do that. Because that's kind of what I'm fighting with right now. Giving such good information, but at the same time, it's not that person's time. The universe says so, So it's like I can't fight against that. But the one thing I want to make certain is that there's no losses. Because how does that even happen in the first place, right? It's like a step-by-step thing. It's not just people leave out of nowhere. It's usually losses stack up. Usually then the wins stack up. Then they end up being profitable with no losses. And then because of that, they then are overconfident and start shredding their whole entire account because they're just putting too much capital in. They're not taking out capital. So when there's a time of, hysterical movement, which is kind of what we're getting right now, you get basically thrown out the park. Think about it. If you're full porting with your account or putting half your account on trades that expire within a week, if the trends go against you for a day, that's it. You're done. That's all it took was a day to get you out this market. That's what you don't want. That's why I tell everybody, when you hit a certain level like 590, I mean, even at 592 right now, right? If I'm being completely real with everybody and I had to actually give you the exact direction of what's going to take place here, point blank, if you hold 590, just like how you did 3 weeks ago, look how much times you held this level. You held it here, ran up. You held it here, ran up. You held it here, ran up. Now let me ask you, where are you right now? You're at the same level. So that means most likely, yeah, you're going to hold. And if you really wanted to play this logically safe, just play half of the trend. So what's half of 610 and 590? That's 600. So theoretically, right now, if you play calls that expire in 30 days for this level right here, even though we're not close to that level, you're about $8 off of it. You have a good opportunity to make a crazy ton of capital. Remember, I have a couple family members here that they put in $50 to $1 and, $50 to $100. Of course, not just like a single dollar. And no, yeah, they're getting like 300-400% every other day. And again, what they're doing is they're using the concept that you don't need to put a lot of money into this market. But at the same time, if you were trying to play something aggressive, why not play a 0 day that's, 1 to 2 strikes out, right? It's kind of what you want to do if you know what you're doing, because then you can actually take advantage of that larger portion. And you're going to make as much as you would have made with the 3 to 5 to 10 day with the 0 day. as long as you get one that's 2 strikes out or 1 strike out. For instance, the 590 right now. Let's go look at the prices. Okay. Let's go look at 590. And remember, every single month, I want every single one of you taking pictures of the options board. It seems like the advice that I've given so far has helped a lot. Truly, it has. But it's not being burnt into everybody's memory, kind of how I would want it to. So, or want it to be, you know? So due to that, we just got to fix this up. So again, if you're looking at, why is this 3-day? What am I looking at? Jay and John and Johnson. Oh, I was about to say, what did they take out? Imagine they take out the 0 days for SPY. I would be devastated. I wouldn't know what to do. Let's see. So the 595s, right? Remember, we're thinking this market's going to run to 600. So you could run right back to 600 just due to the fact that you hit 590. So if you're following along with the same ideas last time, which last time, again, you held down here, you ran right back up. You're above that point. So, no, yeah, you're still bullish, basically. I mean, of course, you're not bullish on the 1 day or 2 day or 5 day. This is all bearish, right? But if you're looking at, you know, the data since the 3rd of this month, which is kind of crazy. I'm not going to lie to you. February just flew right by. This was way quicker than January. I don't know what just happened. How is this the 3rd? I mean, for the middle of the month, we weren't here, right? Which I will actually change. Next time I take any type of little break, I'm going to make sure that it's not going to be next to the middle of the month. Because I feel like if I was a little bit more in tune with that, we could have made a little bit more. But then again, that also is an excuse, right? You could do a lot. People are amazing. We could have probably found a way had we had wanted to. So maybe it was a matter of us not being that motivated, or maybe a couple of other things out of line. We'll have to, sort that out somehow. But yeah, because we're going to take a giant break here soon as a group. And this break is going to be about 1 to 2 weeks. Again, let's go back to the SPY contract. Let's finish this up. And then I have something else to say. Actually, let me just go over this right now, because this is actually going massively in our favor. So on the Euro chart, everybody, we bought the short right here at the top, and we're already up a really good amount. That's $4. On the 2-cent account, everybody, we're at 14 cents. So now we're starting to fly up here now. Again, last night we were at like 8-9 cents. Right now we're at 14 cents. I'm going to sell it here. Should I sell it here? Let me see. Let's look at this. How far am I away from making 2 cents? I would need this to drop down to here. Let's play devil's advocate. This is what we're going to do. We're going to go here. And since we made a cent, we're going to sell it out right now. And then we're going to instantly hop into the other way. Let's see if we can get some zigzag action here. So again, now I'm in the call side now. I might sell out on the other accounts as well, while they're still massively up. Actually, that account will hold, because we're playing for the bigger downtrend, which could take place within the next week to 2 weeks. So we'll see if we get margin called on that one. Any of the bigger accounts, we're completely out the trade. So again, that was $4. And then on the 50-cent account, we're currently at $4.30. Remember, this account we started with 50 cents. Currently, we hit 7, got reset down to 3. Actually, no, got reset down to 1, and then we just brought it down, brought it right back up to 4. So basically, right back up to 1,000%. The goal with these accounts, by the way, is to actually hit a crazy number. And theoretically, there is no financial asset in the world that you can invest into while it's cheaper than a cent. I don't even think with crypto, correct me if I'm wrong, everybody, but I don't even know if some crypto brokers, if they allow you to buy something for 2 cents because they charge you a fee. So it's like you still need extra cents. Even if you could just put something for 2, they're going to charge you that fee. So theoretically, from this point onwards, after the next week to 2 weeks, maybe a month, we're going to break such a historical record that nobody forward or going into the future from here will ever be able to break, is what I'm saying. That's kind of what I wanted. It's kind of boring being able to do something and then understanding and knowing that someone's going to be able to, break that record. That kind of makes it less fun, But a record that's almost impossible to beat, because theoretically there probably is something that you can invest into for a cent. That's going to be the next, I don't know. I think that would be fun. Some type of idea going on here. All right, let's see. What's this? We're still up here. Bitcoin, you're still holding at that middle area. SPY, you're still holding at that next target. Where is it? I think it was right about... There you go. So remember, everybody, you can get bought up past 600, and then past 600, you can get bought up to 602, 605. We just want to see stuff happen little by little. I hope this doesn't happen too quick, because if we just run up to the top, I doubt anybody got some larger plays for the upside. Remember, at 590, that was one of the best levels, and then of course 592. 2 buy into plays. That's why I gave that long-winded speech earlier, right? Which means, everybody, if you bought into a call down here, are you even looking to sell it right now? No. So in fact, at this point, you're either playing a 0-day for the calls right back up, because a 0-day plus a 30-day would be a really nice pair if you were playing both at the same time. Yes, it of course could go against you, but at the same time, with the 0-day, you're not putting 5, 10, 20,000. You're putting $20 to $50, which that option that's 3 to 5 days out is going to make that and more, just in case those 0 days fail, right? So what if you needed 5, 10, 11 extra days? So be it. Again, that 10-day contract will pay for it. As long as you're not just doing this every single day. But there is one way that you can actually do this logically every single day. And again, the way you would do that is just a low amount of capital. As long as you could play with a low amount. Imagine this. You play with a $30 contract. Watch this. Watch this. Watch this. We'll go back to the contract price, because we talked about the euro. At the bottom right down here, let's say you got a 595. The 595s were 43, right? Currently, they're hitting a high of 86. So that means if I have an account size that has around 15 to 20K, in this trade right here, I'm only going to put about 2 to 500. Even with 15 to 20K, I would only put around 2 to 500 into this trade, and it would have turned into around 400. It would have doubled it, which is nice. It's kind of what I want to see. And because I have a bigger portfolio, I'm not scared about me not missing out on this. Now, the second thing you might ask me is, why would I, if I have 20K and I'm trying to really grow my account, why would I only be messing with $200? Well, that's the thing here. This is a training example for you trading a 0-day. When you're trading with a larger account, you're never trading 0 days. So that means if you are trading a 0-day, you're trading with far less capital, right? That only makes sense. Let's say if I was trading the 30-day now, and right down there at the bottom, I bought the 600. Again, for 31 days, let's say you just cut it by a few days, actually. Cut it to 24. 600s. IV 15%. Am I tripping or is this way too much? $2,602. You shouldn't be $600, but then again, it's the 600 strike. If you're playing for that level, theoretically, it would be that much. The one you would want to buy would be. It'll be 601. This one won't be for 30 days. So this one would be for the top portion of the trend. That's how we did it all the times last time. Meaning it would be like 615, 620s. That's how far you can go with this trade. But we're not going to go to 615 because, again, by the time the market runs up into the high, we want to have the opportunity to sell out while being in the money at least. Remember, out the money to in the money is exactly what you want to do here. That's the quickest way to make the most money here. Especially if you're trading with something 30 days, right? So 610s, 630, 300. That's about right. So again, for buying a trade at the bottom right down here, let's just say you put around 30K or 15K, right? To kind of go with our example from earlier. You put around 15K into this trade. Options were around 310, 315. I'm not going to count the bottom wicks. I'm just going to count the candles. And if you look at the current top of this candle, that's about 330, right? Your options would have been up around 8 to 10% right there, just with that trade. Now, when you got 30,000, 15,000, 8 to 10%, of course, is still very small. And I agree, it's not that crazy. But what if you do this every day? Where, look at yesterday. Yesterday it went from 400 to 538. That's about double today's gain. You know, that would have been like a 20-30%. So that basically states that. And then look at the 23rd, right? 23rd, where's the 23rd? That's the 24th. 23rd was, the market was closed. 21st, I mean right here in the morning, right? 700 to 800. Of course, you wouldn't be buying this contract. You would be buying something else that's a little bit cheaper. What I'm trying to explain to you is that if there's a contract that went from price to price, all that states is that there's a contract that was shorter dated that moved the same amount. Because remember, all the contracts on the options board are the same thing. The only difference is their current cost. Does that make sense? They all move up the same amount. If you look at a call for 610 that expires in 30 days, and then look at a call for 608 that expires in 15 days, right? You're going to find that they literally move the same amount of money per day. Like the dollar amount from bottom to top or top to bottom, it's the same amount. The only difference was that the 31 day cost 300 and the 15 day only costs 150. You get it? So the one from 300 went from 300 to around like 410. The one from 150 went from 150 to around 260, right? Up 110, just like the other one did. So it's wild. It's absolutely wild. But all the options are literally the same thing. So it makes it's just like pointless for you to buy an option that expires in 20 days. It's pointless for you to buy something that expires in 12 days. Because now you're just playing with fire. You know what I mean? It's like you're playing with fire more than you are actually playing with the actual trend. So let's look at SPY now. 590. Top is 593.50. That's about $3 on the dot. Next multiple is going to be 75 cents. 75, that's $1.50. 50, that's $2.92. If you can stay above 592 flat, the trend will continue to run up. Again, if you can stay above this point right here that we're at, we will continue to run up higher. If you can't stay above 592, you're going to get shut down to potentially a lower point. Again, you're at the bottom range of the chart. Things are just slightly more bearish than they are bullish. And that's just the way things are going to be down here. Once we've once we've hit the level that we've needed to hit, of course, you're going to see us go right back up, right? So that's the one thing we're looking for. And let's just say the SPY is crashing out the sky here. Perfect. One thing you want to do is, let's see if we missed the first leg from top to bottom, right? 610 all the way down here to 591. Let's just say it was missed, right? There will be a bounce. When we bounce, we're going to pay very close attention to how it bounces, of course. And in that bounce, in that reaction of you, let's just say falling $30. Let's say if you run up only $15 and you don't get above that midpoint, most likely you are bearish. So in this scenario, if you can't hold above 592 flat, you are most likely slipping into bearish territory again, which is kind of what we're doing right now, right? So that's like the little finicky short term. The longer term, it's basically is this over here. You're going off of these lows. So because you're holding the same area, technically this is very still bullish. Still bullish until you fall beneath 589, or no, I would say the first level here. So the first level, let's hide everything. That's at 590.12. So the second we get below 590.12, which is your first major area, you're not supposed to get below this area, but if you get below it, you're going to have one more level down here, which is about another 30 cents. And then one more level right down here, which is about another $1, you could say. And after these three levels, it's pretty much a straight drop out the sky to about the 585s, which is that gap we need to fill. Remember, there's a gap here. Hope everybody remembers that. I'll show you right now. Make sure you don't forget that. There is a very large gap right here, as you can see. It was so funny because when the market was supposed to fill the gap last time, it filled the one that was above you instead. And then you just went up because at this point you had a large gap to the top, crazy large gap to the top, and then a smaller gap to the bottom. And you decided to fill that one, which was wild because look how much of a jump that was. That was a $9, $10 jump right back up the same day. Imagine. That would be so funny if it does it again. That would be ridiculous. What is this trade at now? The euro trade is going back in our favor again. All right. So remember, we have a large gap right down here, anywhere below 588, which is pretty much the last bit of the trend. So let's just say today is one of those days where it's just gonna test the top of it. We just have to wait for tomorrow, and then we'll just fill the rest of the gap. Once we fill this gap tomorrow, we'll wait for it to drop down a little bit lower than it. Once it ends up around 584, we'll buy our final position for the upside. Anything below 584 is a straight drop out the sky to 565. So that's going to be about $20. It doesn't matter how much you spend for those calls a year out. A $20 drop on SPY with 5 days to 0 day options. you're going to make 2 or 3 times whatever you put into those long-term options. I can promise you that. Because now, since you have a level of insurance, there's going to be actual meticulation behind what you're doing. It's not going to be as random as it usually is. That's why I tell everybody it's very important for you to lock in contracts 30 days out without the intention of you wanting to sell them. That's just insurance. Within the next 30 days, let's say that option is not valuable. Well, guess what? Within those 30 days, you should have used that insurance as a level of or as a means of a shield, right? To make more money. Does that make sense, everybody? Or does that sound crazy? Let me know, because I could feel how in some sense that may be just wild. One may not be able to understand that. But at the same time, I can feel how everybody here can understand that. Does that make sense? You're buying something 30 days out. You're not selling it. You don't care about selling it. Those 30 days on the clock, that's when the timer starts. Now you have to make that money back. And you have to make that money back first with, of course, maybe 5-day contracts in case you don't want to be too aggressive. But most importantly, you have to be scalping. Throughout the day, there's about 30 to 40 to 50 scalps that occur. They're going to be within the percentages of around like 15 to 30%. So that means throughout the day, you have about 20 to 30 different moments in which you can get a 20% gain. Does that make sense? So if you just get as much 20% gains as possible, even if you're buying contracts that are $30, I've actually ran by the experiment. There was this one day where I had a $300 account. Forgot how much wins we had, but I think it was 14 to 15, 16, something like that, somewhere around there. It was under 20, above 15 or 14. It might have been that 13, the 13 day too. The point being, we had around $300 during the beginning portion of the day. At the end of the day, with us just selling out all of our contracts at 30%, we just 30% sold, 30% sold, 40% sold. Maybe one of them went a little bit higher and we sold it, right? At the end of the day, that $300 account was at $700. So the account had not only doubled, right? But we had some extra capital on top of that. Just trading $30 to $40 contracts, rinsing and repeating, rinsing and repeating, rinsing and repeating, rinsing and repeating. And that is the most wild part to me. So, no, yeah, you can make a crazy. And how much is that option that's 30 days out, right? It's going to cost what, like $200-$300? So you just made that back in a day. Now you have an option that's 30 days out for free with the money back in your pocket, with you now still being able to use that as insurance the next day. You don't have to buy a new level of insurance. Every single time you fall to a new level, you will have to buy a new level of insurance. Does that make sense? So that means if we fall from 591 to 585, again, a new level of insurance. And the reason why I say that is because you still have a long way to go before you hold at 565 or 555, which are going to be your last major areas of support for SPY on the way down. All right, SPY. What's going on over here, huh? Looks like you're holding on top of the purple. Where did you run to? The midpoint. After you ran to the midpoint, you got sold right back off to the top of the purple. And now you look a little bit more bullish, right? Now you don't need to fall into the purple. Kind of like the first time you fell into the purple and you hit the halfway point. So that first drop was a little bit more bearish, right? This is more bullish. That's a staircase. All I want to see now is you simply just start running up a little bit higher. You hit the pink, you hit the green, you got sold off. I want to see if you're going to hit in between the blue and purple here. So I'm thinking the market's going to run to about right here. After that, you might get sold off again. Or if you drop below 591 flat, puts to the downside. So again, look at the trend, right? Because this area right here is higher than this area, I'm thinking the top is going to be the same thing, which as you can see how it matches up perfectly with the circle, with where you're at, with how far the distance is between this one and this one. You can actually kind of calculate exactly where this next one would be. So right before it even hits the yellow, you might have to just sell out of it. In fact, I would sell out of this trade if I buy down here at the purple. The second you hit above the blue, that's pretty much where I would start to look to sell out, which is right above the last high. That's where the contracts should get their first bit of acceleration, is once you pass the last high. Of course, passing the EMAs are going to accelerate contracts, right? Because more people are going to be piling into it, buying it for what it's worth, holding its value, and now making it, you know, basically cost more. 592.36. Remember, you're playing the trend. You're not playing with what you think. You're playing the trend. I mean, the trend is kind of, I should say integrated with what you think at this point. But what I'm trying to say is you're not choosing your emotions right now. You're just straight up looking at the chart and whatever the chart says. Just like last time. Remember, we spoke about you falling through it. We spoke about how last time I did it for 4 days. So we still have another 2-3 days here that you could potentially hang towards these lows, which is just that's just to kill the contracts for this week, right? So that means all the 1 days to 3 days, they're just going to get completely destroyed this week. Starting next week, we're going to open a new position down here. And with that in mind, things should be pretty good, I'm thinking. Let's see, because today is Tuesday. So that means that's 1, 2, 3, 4. So yeah, we might have to buy a new contract tomorrow, actually, on the 26th. We have FOMC on the 18th, so we're going to be playing the first week. We have to make sure the contracts for the 13th are not that expensive, though. I hope they don't get ramped up by FOMC. Oh man, FOMC. Are you guys ready for that? It's like a damn field trip. Remember, David, whenever you get a chance, I want you to put DARP version number 3 on top of Euro. So I want you to have these on your chart here. Remember, Bitcoin could still get sold off. You might get bought up here because you're at the lower point. Just wait. We're going to get some really good entrances down here. I'm telling you, nobody in the world has these levels for Bitcoin. And, no, yeah. It's impossible. I don't even know how I made this. I'll be honest with you. The only reason why I'm looking at this right now is because the other day when I cycled to the Bitcoin chart, I was like, when the hell did I do this? I don't remember doing this. Because I don't even think I did it for... No, yeah, I didn't even do it for Ethereum. You know what's kind of crazy is I can kind of see exactly where the midpoint is. Quarter points, that's exactly what you hit right here. No, yeah, that's wild. So yeah, we could do that on Ethereum. Why does it look like Ethereum works out better for it? What in the world? No, yeah, because you did not pass the 21 highs. No way. Wait a second. We could literally trade Ethereum just like SPY. Wait a second. I just realized that because with Bitcoin, you're above the highs, right? So that means, look, watch, let it load. So that means the same areas that we were messing with before, that area with, you know, the information that you gathered from top to bottom is what you have for this area. Of course, you're going to overlay that into this new portion to then see what you can do. So like for instance, you see how you got to this portion down here, which is your 1/4 point. That very much means that when Bitcoin runs back up here, you might touch around 112 to around 121,000. The next run right back up here. So it would be something like that, right? That's basically what the last trend is telling me. And that's just looking at these two previous highs and their reaction. So if that's the case, yeah, you're probably going to run to this portion up here. However, when you're looking at it like this, and you're currently in that range right now of the ultimate range, the way you could play this is way easier, because the current reaction that you're getting right now is basically telling you what the next reaction will be. On the Bitcoin chart, we don't know what the next reaction will be. You get it? So it's just a matter of time, really. By the way, look at our first Bitcoin chart we made. I have no idea how it's still working. I'll be honest. It's just working every single time. Even right now, before you're holding, right? We have so many points that state you're going to hold here and bounce up. And since you didn't do it the last time, it's kind of funny, but you could literally do it right now. That's why I'm thinking Bitcoin is probably just going to bounce up here, go up here to 90,000 again, and then possibly fall down lower. Which is kind of crazy that I think it was like 130 billion got wiped out. That's why this drop even started in the first place. But yeah, in case you can't tell, I really don't like crypto. I really do not like it. It's like I said, it still makes no sense right now. Everything crypto is just imaginary. Same thing with NFTs. It's all imaginary. It has no value right now. So we'll see within the next couple years how some of these smart contracts and some of the values start to be applied to just these coins. That's the only thing I want to see. Which could happen now that, of course, you have the new administration now in power, right? I'm pretty sure that they're going to be a little bit more crypto focused, but at the same time, that still even worries me, because how long has the stock market existed? Since 1780s. How hard is it to pass laws and regulations on the stock market? Extremely hard. Why is crypto regulations being able to be passed so freely? That doesn't feel right. It's very simple when you look at the bigger picture. So it's like, one, it doesn't feel right. Two, there's no value. And it's being pushed. This is not good. This seems like a bigger scam than even what's going on with the government and their spending. So we'll see. We will see. As long as we put our values at a very cheap price, we spend almost nothing on this, I think we're going to have a good time here. Tesla's getting shot out the sky. This is beautiful. This is absolutely beautiful. We'll have to look a little bit more into Tesla once the market closes here. All right. Is there anything we need to look at, family? What we thinking? Any long-term plays? Any oversold plays? I have to create the channel for Sam. Sam, I apologize for that. I was supposed to create that for you. Let me actually fix that up now. Because that's the thing. It's just like, yeah. Let me just fix this right now, actually. Okay. Where should I put it? Oh yeah, I was gonna wake everybody up last night, but it was like 12. It was like 12 a.m. Was it 12? No, that's a.m. Yeah, no, yeah. So it was a.m. Wait, no. No, yeah, a.m. Like 12 a.m. last night. I was about to tell everybody to hop on because I had like a premonition of something, but yeah, I wasn't trying to wake everybody up. Okay, so we have paper trades. We got lead plays. Should I just put it here? I guess I'll just put it here. We'll call this oversold plays. So this is gonna be like your babas. This is gonna be like your. Let's see. Where is it? Oversold plays. And then, or should I put in the watch list? I think here, because it's trades. Let's not confuse the thing, because I already have too much channels here. By the way, look at this Baba. Look at Baba, everybody. When Baba was at, this is what I'm talking about. This is why we gotta have like a whole channel for this, because I kid you not, if we have a whole channel just for this, we're gonna smoke the whole entire S&P 500. Give it like a month, every single name is gonna have a chart done to it. Because the charts, they don't take that long. They take about 15 minutes, you know. But yeah, we're waiting for 89 at least. And then, so, all right, everybody. You could post pretty much all your stuff here for oversold plays. And anything else? Any other channels you guys want me to create? We have an earnings play channel. Where's the earnings? Right here. What earnings do we have? So this is 25th. Home Depot. Planet Fitness. Let's see. So what earnings would you guys want to play? Let's pick one of them. We're already playing Nvidia, so we're not gonna count that. But let's pick something else. Let's pick something completely random. I think that would be I think that would be fun. Something random, but it has good value, and it's on the S&P 500. We have to make sure it's on the S&P. If it's not listed, wait, Joby Avio. Wait a second, I forgot about this company. I just remembered it. Joby Aviation. There you go. Yeah, there you go. Fall out the sky, please. We're going to buy into this company here. This is a Chinese car company that's creating flying cars. I could be incorrect. Is this the Chinese one? This might be the US one. This sounds like it's Chinese. Joby. Maybe that's not Chinese, actually. No, it's New York Stock Exchange. But then again, that could still be... where are you? Yes, so this is California. Perfect. Yes, this is the California one. All right. So this is the one we're going to be invested into soon. Again, main purpose is just for flying cars. We're going to open up options positions on this for basically your max expiration. And all we're looking for is a run to the midpoint. So names like this is kind of what we want to be playing with. But remember, we're not going to put too much into this. This is just like a free play. If it works, it works. If it doesn't, it probably might not actually work. You know what I mean? Because again, this is based off of technology and the time that a company is going to take to basically unveil something. So right now, all we're doing is we're putting in our capital for the potential opportunity that they come up with something insane, because this is one of the older companies I used to watch and look at. So I know they have potential. It's just, are they continuing to have potential? That's the one thing that kind of gets in the way of these cheap plays, which is why I say, you know, let's just look at plays on the S&P 500 instead of anything random. But no, yeah. Let's look at this. Nvidia. We missed the Nvidia position, so we didn't hop into any Nvidia puts, but we had stated the full drop that was possible, which is perfectly occurring. Our next position for Nvidia is going to be a lower point. So we're just waiting here. Microsoft. I can't believe I got so gassed earlier. I thought I actually like to the exact date. I couldn't believe it. Apple. Apple's just being Apple. Tesla is being Tesla. We're not going to talk about that, actually. We're going to take that off here. Okay, so what we thinking, everybody? Zoom. Wait, Zoom is coming up? Where's Zoom? Zoom is Fubo. Fubo 2. Fubo, I messed up. I messed up, family. When it IPO'd, I had it at the cheapest price. Oh, man. And I let go of it for like 100, 200%. And it ended up going like, I think 3, 4, 500% on top of that. I forgot how much exactly, but yeah, I just stopped watching it. Norwegian Cruise Line. So that's actually kind of cool for the summertime, right? What is it, GEO? I wonder if they come up and report how much people. Do you think they do that? Do you think they report how much people actually take the cruises now? Because I'm guessing people would pay for them now, right? So they would probably have some type of idea. So we could probably make some. Let's go to a different chart, actually. Let's go to. All right, let's just take over this chart here. Norwegian Cruise Line, GEO. That's not GEO. Is it GEO or am I reading it wrong? That's way off. Norwegian Cruise Line. $24.29. So you already started running. When did this start running already? It started running around August of last year. And then over here, it was running March, but that was COVID. May of 2023, you started running up. And then you peaked in July. February, you peaked twice with the November peak. That's kind of very similar to right now. You kind of peaked with the winter months, with the spring months, right? So now, this might be a crazy entrance here, actually. You might just run right back up. Last time, this fell from 18 to 11. You fell from 29 to 24. So you might be able to fall down a little bit more, if anything. Maybe to like 22, 21. And then after that, you might see that same continuation of that swoop right back up, right? So what I'm basically stating is you're either going to go down a little bit more and then swoop up, or you're just going to swoop up now. So this is not a bad entry here. We could start chopping this one up too. And then what else? Oh, because I see it now. The ticker's on top of it. Vistra Energy, Soundhound. We actually have a really good chart on Soundhound that we did a while back, a couple months ago. TD Bank, Duolingo. I think something just happened with Duolingo. They have a stock? Since when they had a stock? D-U-O-L. D-U-O-L. I think something bad just happened to them. $400. What the hell? $60? 2 years ago? 3 years ago? What is this? How does this even make sense? How much money are they producing with that app? Oh my god. So I'm guessing this is because of the recent bad news, right? That thing just shattered the trend. But it's not oversold, obviously. You're way overbought, in fact. You might see this reset right down to like 280, 300. All right, let's stop looking at all these names. My head's already hurting. We'll look at some more names in a second here. So I'm thinking about Norwegian Cruise Line. We have Duolingo. We're going to skip out on Duolingo. We might attack some of the energy plays, but I'm more so interested in us actually positioning for the summer plays. If we could just get a good couple, summer plays, things that are going to peak in June and July, I think that would be perfect, you know? And then at the same time, we're going to be trading our SPY, Tesla. The Mag 7 does not count. So whenever we're trading day to day, the Mag 7, we know it. and trade it so well that there's just no point to count it. These are all free trades. The only thing that's going to take us to the next level now is actually trying something different, which is something that we don't know. So, yeah. Think about it. We're already done with the S&P 500 almost. In fact, if I switch over to this chart over here, just give me one moment. I just want to show you just the concepts and how far they went. If I show you the dollar chart, watch this, right? I think this is when you're going to call me insane, is when you kind of see that everything's done. The dollar's done. Why did I do the dollar? I have no idea. Why did I do the VIX? I have no idea. But now we never need to do them again. And it's going to last for 100 years, pretty much. So, no, yeah. And then we did did I do the Dow? I did the Dow, yes. I thought I didn't do it. Okay, so the Dow's done for how much years? This Dow is going to be done for, did I write it down? I don't think I wrote down the Dow. Oh, no, actually, I wrote it down in here. That was the bigger chart. Right in here. There should be a smaller one. So you see how I made a bigger one? And then for the bigger one, I made a smaller one. The smaller one is going to last up until March 2025. So we still got a couple more months for this before I had to fix it again. But you see how it's still listening to it perfectly? We're literally calling an entire sector. Not even a sector. I'm calling every sector of this market. And we're correct about it. I shouldn't say I am. I should say we as a team, because we've created this together. We've upgraded this together. And we've clearly taken this to the next level together. So I want all of you to feel very proud in what we've done here. Nobody in the world has done this. And look, it's still working. Wild, you know. We need a round of applause for that. Come on now. I don't have any buttons or sounds, so we're just going to have to sit in silence this time. But just imagine someone was clapping their hands. Imagine there was like 200 people. There you go. The only thing we had to do, I think, is the Russell. After the Russell, I think we're done. But I pretty much did the Russell, and I did the NASDAQ. I just did them in different ways. These lines right here are my first style I've ever created. So I still had to break that down. It's a lot, and I don't really want to do it right now because it's not really helping everybody. It's more so helping my own self. So maybe in like a year or two, I'll probably have time for that. But for now, we're just going to keep advancing these styles that we've created together. And look at this style, for instance. The simple fact that you broke above this box right here. So that's a breakout, right, everybody? Boom. Watch how cool this is. If you had a breakout to the top side, what does that mean if you're right back into the trend? It means you might go where? Crazy, right? So, and you're actually following it. You're more than halfway there. So let's just say if you were playing that idea up here, the second you ripped above the whole entire trend, this is one of our greatest creations, and it's basically equal reaction. That's what this means. You're getting a clear equal reaction to the downside, so it's a style of trading in which one does not need to think no more. It's a style of trading in which one waits for the levels to be hit, and then you're playing the reversal of those levels. And they're so extreme that theoretically they're happening so scarcely, not every day, once every 2 weeks, once every month, that once you get that entrance, you pretty much get the best entrance almost every single time. That's the wildest part that I've basically discovered about this market. Everything is predictable. At one point, calls and puts will tell you if the market is heading up or down. Both sides, they point to the same direction. So as long as you're not being biased, which, let's be honest here, we all are in our own ways, right? It's nobody's fault. Don't feel like it's your fault. Don't feel like you're to blame. As long as you just recognize that you do it and we all do it, and you could stop doing it, you know? Just got to be real with yourself. That's the way to make the most money with this market. Is to actually be real with yourself, you know? Don't lie. Treat it as is. If you failed, you failed. You kind of want to fail because remember, if you can fail quicker here, you're just going to be more successful. So, yeah, take your time. You're still at 590. Think about that. Now you're a little bit more bearish. Instead of slipping to this top portion, you just went right back down. You hit the EMAs, and you're just continuing the downtrend. So what does that mean? It means how low did we go on that little drop there? 589.56. Let's just zoom out real quick. Let's see what happened the last time you were down here. So you fell lower than that point. You fell lower than that point. 589.90. You did not fall lower than this point. So you just cracked through two very important levels, but you held above the last one. What does that mean, everybody? That means you have one more location that this market can drop to before it gets bought up, which is going to be a little bit below the last one. Right? Isn't that crazy that you can predict that? So again, this right here, this whole area, you would just be buying calls here every single time it hits these bottom little fins of the trend. And this is what you call range trading. You're not fundamentally looking at the theta and the delta and all that nonsense. You're just looking at where this is on the range, and you're just buying. Whatever you could buy, you could buy. If it's a $10 contract this time, see if it can actually go back into value. Of course, not every time will those contracts 4 or 5 strikes out be valuable again. So it's just a matter of time, you know. Matter of time, a matter of, again, trading the range and putting a very low amount of capital. $20, $30. Because with a $10 one, again, it just might go against you, you know, and I wouldn't really want that. So if you could trade a $30 to $40 one, I know that's going to be about 3 strikes out. And I know that if you snap about $2, that's about a change in 2 strike prices, which means that your strike price moved again 2 times. 2 times in terms of a movement with a 0-day strike price, you're going up at least 30 to 40%. So even if you don't go into value here, I could theoretically automatically already estimate that one would make around 30 to 40% on a trade like this. And it's just because of the range, you know, just because of where you're at. And then as you can see, we state to buy 30-day calls around this area here. So this is your area to be buying 30-day calls. What calls would you be buying 30 days out? Again, I'm looking at them right now. You got 610s. You have 611s. Remember, I want to go in the money at least $1 or $2 before I have to sell this. So I want something for 610, 613, somewhere by here. If I'm trying to be aggressive, though, I mean, yeah, you could get a 630 now. Where the hell are they? There they are. So you can start opening your positions for the 630s. But again, I would only do that once you hit 585. So let's just fill this gap first. Once we fill the gap, then we'll start buying the extreme portion of the trend. For now, we're just going to keep trading the bottom portion. Just in case, right? Because sometimes, like, we trade the extreme portion, and just like NVIDIA, right? Let's go to the NVIDIA chart real quick. It was kind of disappointing. But because we were trading the full range of the trend here, we were trading 160. So the contracts expired up here, and we bought them down here. Had we had just bought the 40, 140 or 130s, we would have been in the money, and we would have been up 1,000%. But because we were trying to be a little aggressive, and point blank, we were just trying to be aggressive with it. We only caught 100% from this right here because the options expired up here, right? That's their strike price. Yeah. A little failure, but that's okay. Because now it just tells us how to play this a little bit better. Just a little bit better, and that's all we need. That's all we need. Because if we got 100% trade on something that was a failure, imagine when it's a positive. it's probably going to be like another 1,000, 2,000% gain, just like how we got in January. And that I'm very excited about. Same thing with Tesla. Oh my God, Tesla. This is beautiful. Let's see. Your reversal chart, you hit the bottom of the yellow zone again. See, there's something about this chart. We got to investigate this. We got to have like a hour to 2 hour long session this weekend where we're just breaking this chart down. This is absolutely wild. I haven't paid attention to this at all. Like, I haven't been looking at none of this. And, huh? How are you getting perfect touches still, you know? Even today at the top, when you ran in the middle, you're still getting these perfect areas. Even this right here in the middle, holding in the middle, going back to the middle, down to the bottom, quarter point, back to the middle. This is beautiful. Again, this is the first time where you see basically almost reversal point number 7, I think, right? It's been a couple days since you got something like this, which is really good because it tells us that tomorrow is probably going to be a $4 to $5 day as well. So tomorrow's going to be really good. We're going to be focusing on the 3 days. Actually, no, we'll focus on the 0 days. I think that will be much better for us. And then pretty much this one worked out. So now I'm going to give this a check mark because it worked out. You fell from 595 to 588. Well, you fell to 589, but cough, cough. That's right there. We're going to count it. We're going to count it. Give me one moment, everybody. Okay, so I just realized something. We're going to have an intermission, everybody. I completely forgot about that. Oh, shit. Uh-oh. All right. Just give me 1 second here. Let's put you right back on your supply and demand zone chart. Let's put you right back at the 5 minute. Perfect, perfect. Let me see. I have to do something very important here, health-wise. So I might have to step away for like 2 hours. My appointment's at 2. Okay, so that's how much time I got. I still got basically 2 hours to get there. Right? That's 1 hour. No, yeah, I have about 2 hours, so it takes me about like 30 minutes to get there. So I'll leave at like 12:30, 12:10. Let's set up everybody so that you're good for the rest of the day. All right, first thing is first. On the bigger trends, you're still at the bottom of 590. We might have to give this another 2 days. Last time, the second day, you had basically ran from the bottom straight back up to the top. So I'm wondering if today is the bottom, because you can go down a little bit more. Tomorrow might be the bottom, and you might just run up from the bottom tomorrow. But from here to the end of the day, you might just run up to the top of this portion here. So you could say for today's move, you want to see 595 for the run right back up. That's the most extreme thing that's going to basically break you out this range potentially, is if you run straight up to the top of 594, or if you just point blank get below 588, because then you're going to play to 585, 583. You're going to fill that gap, and then you're going to play the continuation right back up. Because remember, you still have not hit the gap yet. You're still above the gap. You might fill it tomorrow, though, because you're right above it. So we'll allow the market to fill it. For now, we want to see if you're going to hold on top of it and then run up higher. And then we'll play the puts going right back down on top of the gap tomorrow towards like maybe 2 or 3 p.m. today. And we'll just go from there. So again, we're going to play the calls from here to about 594, which should take up until about 2 to 3 p.m. And then at 3 p.m., we're going to buy some puts for this to fall back down and fill that gap tomorrow. As long as we're at 595. If we're not at 595, we are not going to buy these puts because the puts and their prices are already going to be basically in the ceiling right now. So if I tell everybody to buy a put, I'm basically telling you to buy a put at the most expensive price. And that is not going to set you up for success at all. As long as I give you the best prices, that's when we can kind of start the conversation of success, right? So, yeah. Taking a step back here, taking it slow, recognizing and realizing this market could just zigzag for another couple hours. So, let's just let it do that. We'll get some cheaper prices, and at the same time, we'll play the swing right back up. So, this is perfect. What is this chart? Oh. And so yeah, I cycled through about all the charts for SPY throughout the last couple days, and I fixed all of them. By the way, there's about 39 of them. So we have 39 SPY charts in total. 34 of them are in operation. 5 of them are not. And if you need basically a description into every single one of these, I just want you to DM me. So DM me, tell me how many charts do you have, as well as list the charts and the trading styles that you've taken and you're basically using, and make sure you list it in the DM. So just so we can start having an idea, because if I can get a bird's eye view of everybody and the styles that they're using or the charts that they're choosing to copy, then we can have just kind of a greater teaching moment, right? Because let's say if someone likes supply and demand zones, but they don't like DARP, but I'm just teaching DARP all the time, they're not going to have too much fun here, you know? So I just want to see who wants what, who knows what, and then we could build upon it. I think we're going to be capped out at about 50 charts. So we're going to take our time, and we're going to try to not hit the 50 by mid-year. But I already know if we start creating some new trading styles, I'm thinking we're probably going to have maybe like another 10 this year. We're not going to create as much as last year. Last year was absolutely absurd. We created about 80 to 60 trading styles, depending on if you simplify them, because then it would be 60 instead of 80. But if you're actually looking at them for a raw idea, it would be about 80 different styles. And we have them on about, 39 charts, 35 charts. And mind you, this is all the SPY. These are all SPY. That's why you see so many SPY charts at the top of my screen, because everything is different, which is the reason why success is always going to happen, because we're aggressively ensuring that success is basically a byproduct of every single day's movement, just because of how much charts we've created. It's so much aggression. It's so much different perspectives and ideas and concepts that when you have them on all these different charts and then you merge them, and then I cycle like this, me just doing this right here, just like this with my eyes, just like that, just like this, just like this, just like this. Again, you don't gotta look too hard. You just gotta look at the level it's at, the level it's holding, and you can see what's the next level. And all the charts point to the same level. That was my wildest discovery, is that when you start really doing good technicals, all your technicals point to each other, just in different ways, once you've expanded it. Some technicals, they're kind of pointing towards short-term movement. So, of course, if you're looking at a short-term move with not that much information or data, you might not see how that rhymes with something else. But once you've done it over a couple weeks and months, just like how we have over the past year, you see how everything rhymes in its own fashion. Some weeks more than others, of course, but the point being that it rhymes. And it's wild. Absolutely wild. So yeah, you almost did the same amount as last time. Look at that. Which means that if you hold here, you're just going to rock it right back up to a higher high now. Which is going to be a crazy gain right now by the end of the day. This will be phenomenal. I'm ready. Everybody ready? What time is it? 11:50? Perfect. That jump occurred at exactly 11:30. Just like always. 30-minute intervals, family. 30-minute intervals. What was the top here? Almost 11 o'clock. And then the bottom down here, 10:30. Perfect. So yeah, 30-minute intervals. We're going to shut down everything and pretty much continue everything on the Discord here. Remember, everybody, after March,